Good day, ladies and gentlemen. So today is Saturday, which is the 11th day of January 2025. Okay, so today I'll be teaching you a powerful reversal strategy. Okay, this strategy can help you catch crazy risk to reward kind of trade. So because they are reversal systems, all right. So this is a strategy that will help you, catch a new trend since the former trend is going to be ending and a new trend is going to be starting. So you're going to be getting a good risk to reward ratio with this particular strategy. So it's just a pattern. It's a very simple pattern. All you just need to do is train your eyes to see it. For example, if you have an uptrend, okay, so the trend is uptrend, definitely you're going to see higher highs and higher lows like this. Then you get to a certain point whereby the low gets broken like this. Okay, this is what you would call a market structure shift, but that's not what we are working on. Instead, we are working on a certain level which we call the QML. Okay, this is the QML level. QML simply means Quasimodo level. So this last eye that was created, I'm talking about this eye right here. You place an horizontal line on that eye. Okay, so you're going to place an horizontal line just at the tip of that eye. Then you wait for price to get back to that level. That's where you're going to be selling from. Okay, you sell from that level. This is going to be your TP1. Okay, then you can trail your stop below that level. That's if you want to hold the trade. But this is the guaranteed level that is going to be broken if you take a sell from here. So this level can be your TP1. Then you can trail your stop to catch more moves. Okay, so basically this pattern is a very powerful pattern. If you can train your eyes to see it, and it's kind of easy. It's more like your normal uptrend, then you have a break of structure in the opposite direction. But the only difference now is that um, instead of trying to look for maybe fair value gaps here and etc. as you do in your normal ICT trading system, you're going to be waiting for price to get back to this level. This last high, okay, this last high is the important level which you're going to be waiting for price to get back to. Then you can sell from there, okay, because it's your Quasimodo level. For those that don't know, this strategy is called the Quasimodo strategy. Okay, this is called the Quasimodo strategy. I've taught this strategy before in very old videos, so I just decided to bring it back to refresh your memories on the system. So those that don't know about it can go and check it out. Okay, can check out the strategy and see how it works for you. And it both ways. If it's a downtrend, you're going to have lower highs and lower lows like this. Then at a certain point, price will push up, breaking this lower high. Okay, so once it goes below that lower high like that, this last low right here becomes your QML. So you wait for price to pull back here and then you buy. Okay, so definitely it's going to be all of this level because sometimes price goes past that line a bit. Anytime you talk about line in forex trading, just have it at the back of your mind that it's going to be like a zone. Okay, price not going to come and respect just one single line. So it's going to be like a zone. Sometimes you go past it a bit like this, then it will push in the direction you want it to go. So your stop loss should be a few pips below this low, okay, below this swing that is right here. So just very simple pattern. I'll be going on to the chart right now to show you a few examples. I'll show you a few examples on the chart so you see how it plays out. Okay, so I have some examples already marked out. So look at this right here. This is a little bit advanced. Let me not show you that first. Let me go to one that is more direct. So look at this. Price was giving us higher highs and higher lows like this. Then it got to this point, putting this higher high, higher low, then went to break the higher high but did not continue. Instead it fell and went below this low. Once price has gone below an higher low like this, okay, once price goes below an higher low like this, then the Quasimodo system is already set up. Okay, so just look for the last high, this high that was taken out. That's where you place your horizontal line. Okay, so you can see where the horizontal line is going to be. Alright, so you wait for price to get back there, and then you take your sell. Your TP1 will be right here. Okay, you can see the way price respected it. Then it went further. So if you trail your stop, you're still going to catch more of the move. Okay, when you backtest, you get to see, how best you can actually tackle it in terms of catching more moves. But this is the part that's guaranteed. This level is 100% guaranteed to be broken. That's why I said you put your TP1 right there. Okay, so that's the first example. Let me show you the second example. Same thing playing out. Price has to be moving in one direction at first, then it gets to a level whereby it disrespects the trend. And when you are in an uptrend, the higher low is not supposed to be broken. So once that higher low is broken, this is an higher low right here. Okay, this is another higher low right here. So once an higher low is broken, then the Quasimodo is ready. You just look for the last high that was taken out, then you place an horizontal line there. So this is the last high that was taken out. Place an horizontal line around that last high. So you wait for price to get back here. Remember, this last leg that broke your higher low, okay, as you check how far it went, okay, before returning to your level. That level is where your TP1 is going to be. I hope you are following. So that level is where your TP1 is going to be. Somewhere here should be where your TP1 would be. So price gets here, taps into the Quasimodo level, and then goes to smash your TP1. Okay, so if you still want to hold the trade, you can see it still went a little further below. Alright, while your TP1 was here, it still pushed down a little bit. Okay, so let me show you one more example. This one is a little bit advanced. So if you are a beginner trader, I would advise you not to take the ones that look like this. Okay, this is for those that are already used to the Quasimodo system. So even if it looks a little bit different, they can still spot it. So this one looks a little bit different. You have your downtrend right here. Then price hits this level, showing you that there is a resistance at this level, and then a support at this level. Then it's pushed from there. It pushed up and then went past that level right here. So this is going to be your Quasimodo level. But before we confirm it as Quasimodo level, price needs to come and disrespect this level up here. Okay, so you can see the way price went above it, because this one is like downtrend changing into an uptrend. You have lower highs and lower lows being created. Then at a point, one of the lower high gets disrespected. Okay, so this then becomes the level. So that's exactly what's played out here. Okay, you have this lower highs and lower lows being created. Then price hit this support level, went past it, created a lower low. So instead of creating a lower high and continuing in the downtrend, it went and disrespected this lower high right here, creating instead an higher an higher high rather. Okay, so once you have something like this, you can see that this is no longer a downtrend. Okay, because for downtrends, any high that is created should not be higher than the lower high. So this high was higher than this lower high, showing you that there is a market structure shift. So what you do then is the last low that was taken out, which is this one, you place an horizontal line across it. So it's going to look like inverse head and shoulder. Okay, So some people confuse the Quasimodo with the head and shoulder, but it's a little bit different. For head and shoulder can be something like this. You have your head, you have your shoulder like this. Okay, this is the head and shoulder pattern, and the reverse head and shoulder is something of this nature. Okay, this is the reverse head and shoulder, something of this nature. So the difference between head and shoulder and Quasimodo is that for you to have a valid Quasimodo level, this part needs to go above this. Okay, so this has to go above this. So if you're dealing with Quasimodo, this is how it's going to look. Okay, you have something like this. Okay, so this leg has to come below this, like this. Can you see the difference? So this level becomes your QML. Okay, whereas in head and shoulder, this leg right here does not necessarily need to go below this. Okay, so that's the difference. So in this case now, look at what happened. Price came back to that level and we had a buy trade. Okay, price came back to this level and then we had an opportunity to buy. Okay, the reason why I said it's advanced is if you look at it, it's not as clear. It looks kind of rough. Okay, but those that are experienced with the Quasimodo, they know how to see it easily. Someone like me, I already know that price is coming down. It hits this support and then it bounces up. All I need to see is for price to go below this level. That's one. Price has to go below this level, and then price has to come above this level also. Once I see that happening, I already know that the Quasimodo is set. So I'll place my horizontal line right at this last low right here. Okay, then I'll wait for price to get back there. Then I'll take my buy trade from there, and you can see the way price pushed in the upwards direction. Okay, so if there's any parts of the explanation that's a little bit confusing, just let me know in the comment section. I can probably throw more lights on it so that you get to understand it's a very powerful system, but it requires skill for you to be able to decipher it when it's playing out on the chart. Alright, so if you got any value from the video, please subscribe to the channel and turn on the notification bell. I'll see you in the next video. Thanks for watching.